To all of you, thank you for being here. So I always appreciate just the level of participation and the general commitment to yourselves because, at the end of the day, it's all about you and what you hope to get from these events, right? And then on my end, it's of course, I hope to provide the content that you're seeking. I hope that it can be most advantageous for all of you. So I'll go ahead and get started. We'll dive right in, and I'm going to get through. Today, I'd like to actually spend the majority of the time on the live charts, and then we can ask, or excuse me, I will go through the questions, things like that. So not worry not to worry if I miss a question or anything like that. What I generally do is hold the questions towards the end of the session, and then I will definitely spend some time with those and get to them. If we don't, I want to go ahead and make note of the follow-up event that we're going to be offering. I will put that on a slide here in just a little bit so you guys can get signed up for that, where we'll be able to just not have any time restraints. Of course, we can go through, because I know you guys are probably going to want to get into the nuts and bolts, so to speak, and not to worry, we will, like I said, offer a follow-up event. And again, we'll get to that in just momentarily, okay? Disclaimer, of course, we have to knock this out. It is very important. Trading does, of course, contain substantial risk and is not for every investor. An investor could potentially lose all or more of their initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient capital should consider trading. Past performance is not necessarily indicative of future results, and so on and so forth, right? So you guys feel free to read through that, but I just wanted to make that always aware. We all know I'm pretty confident of the risks that are there in trading, but I always offer to people, if you want to discuss the risks, do let us know, because I'm happy to actually go through what that picture looks like. A lot of times I've even come into the issue of, hey, what are the risks? But then you get into live trading, right? And you realize, oh, wait a minute, I didn't understand what first in, first out, what the first in, first out rule, FIFO or whatever, acronym FIFO, right? But I didn't know about that. So, well, now I have to figure that out. And then, so there are different ways that brokers handle things and risks with internet connectivity and all of that. Happy to discuss that at any time, okay? All right, very good. So let's go ahead and progress here. As I said, I'll try to get through the screen sharing as quickly as possible, or the presentation at least. So let me tell you a little bit about PFA. Acronym, Pure Financial Academy, is an online trading community dedicated to supply and demand order flow methods. So we have provided training materials and software to individuals looking to learn about trading since approximately 2009. We've been doing this for quite some time. We believe strongly in the power of having others there to support you who are on the same path as yourself, and thus the community aspect, right? We really try to build on that. So our mission is to provide a positive and effective environment for traders and investors who wish to utilize supply and demand trading methods, as well as share their experiences with others as a team. As you can see, we are pretty big on that aspect, right? Community, team, we do things together, and we have that, mantra, if you will, about never leaving someone behind. So we kind of say we never leave questions unanswered. All right, very good. And let me just go back real quick. If you guys want to copy down the URL, the links, anything like that, feel free to go ahead and do that. But I will come back to all of that. There are more important links as we get throughout this presentation. Okay. All right. So we're going to be looking at the presentation overview here, Zone Suite predominantly, and we will be happy to answer questions and discuss all of the offerings that are included in the PFA community. So that, of course, comes with a plethora. The Zone Suite is our software. As far as the what you're going to see today, we have, of course, a very extensive course, our live room, which is the mentorship training and so on. We put into action what we're learning every day, and then our forum where you can communicate with your peers and so on. All right, so the tool itself is designed to remove subjectivity. All right, so the tool is, by tool, I mean the PFA Zone Suite is fully compatible with NinjaTrader 8 and is designed to reduce that subjectivity in determining high probability turning points in the future on any given price chart. So it utilizes price recognition, volume distribution, and market volatility in its calculations, among others, which are displayed on the chart with custom graphics. They can be used for enhanced confluence purposes and many other, as well as for keeping track of historical data, which is fully back testable. All right. So we'll just get started with the tool in itself and some of the multitude of data points that we're going to be looking at today. But as I said, I am going to do my best to do this quickly because I want to actually go through some analysis, not just kind of talk about this, right? So let's go. If I move a little bit too quick, just bear with me, if you will. I think you'll find it more interesting once we get on the live charts as opposed to the PowerPoint. Yeah. Okay, so let's start right here. We look in, we see we have a green zone there. So in the PFA zone suite, all of this being automated, the primary levels, and then we have the yellow as the secondary levels. So to simplify that, these are automated supply and demand zones, and we can pull in and display supply and demand from multiple time frames, all on the corresponding chart. Used to were the days where we had to load multiple charts and look at a daily and a weekly and or a daily and a 60-minute or whatever your time frames are. We had to go across multiple charts and open this chart or change this chart to that time frame. You get the point. It was rather cumbersome, and we've removed all of that. Multiple time frame we've been doing since what now seems like the beginning of time, but taking it a step further, multiple time frames, right? In other words, we have simultaneous time frames all on any chart running at the same time. So we can load a daily chart and have weekly and 4-hour zones on that daily chart. And we can do this all from the zone suite, never have to leave that chart. So that's what you're seeing there. Primary, and I don't recall exactly, but I want to say that in this particular image, I believe that green zone that you're looking at, the primary, is like a 60-minute zone, and then I believe the secondary is a daily. So we would be looking at 60-minute zones within the daily zones. Okay. Some of the other data points that we utilize in our algorithms, as well as what we're going to be looking at as our zone suite strategy, we use an altitude grid. Altitude grid is designed for perceived value, high probability buying versus selling. So if we're at the low green areas, that's high probability buying territory. Vice versa, up into the red would be higher probability selling. And in addition to that, we would say if let's for all intents and purposes say we're coming down to the green area, not only is it important to understand that could be potentially high probability buying, but equally as important, we understand that we don't want to be selling in that area. So it kind of, works on two sides of that equation. Okay. So the next I'll look at is our continuations. We use continuations for confirmation entries. If we're in the right location, we can look at a continuation pattern, and then we can execute a trade in accordance with the direction. So let me give you an example. If we are into a larger time frame demand zone, but we just don't, it's just one of those levels where we've defined based on our very specific rule set that we need to confirm said entry, what we can do is utilize the continuation when we get inside of that level, and then we can execute only if that continuation and or confirmation occurs. And if not, of course, we would just not enter that trade. So automatic trend lines, I think we most likely probably all know what that is, but suffice to say, we have automated the process. Ironically, this was a very difficult one because trend lines are rather subjective in nature, but we have automated that. So very thrilled with that, and we do use that in our calculations as well. So we can place entries based on it, use it for trailing stops. There's a lot of things that our strategy is capable of doing. The next we'll look at is our volume profile. So inside of every zone, we can tell exactly where the orders have been executed. Conversely, we can see where they have not been executed, so that we use that to our benefit, because if we're always thinking forward, we want to look at what has not occurred as opposed to what has already occurred. So it's just a bit of logic there, and we can certainly discuss that tomorrow in the follow-up event, okay? And then we'll also look at our market structure. Market structure is, as I always inform people, kind of looks like a zigzag indicator, right? I can absolutely, I can assure you it is not. While it may have similarities, we are defining market structure based on controlling aspects of the market. So it's not going to draw every swing that you see. In fact, if you look on this particular, let me see if I can get my pointer options here to display. visible? Okay, you should see my mouse. And if you look at this right here, for all intents and purposes, there's a very obvious swing here. There's one down here. But note that it is not pulling those out. It's not drawing to them for very specific reasons. All right, so continuing on, this is just going to be an example slide here, and we wanted to show you those simultaneous time frame. In this case, it is supply. Previously, we looked at demand, and in this case, we're going to look at supply data points, okay? So we have primary supply high, we have a primary supply low, and inside of that primary area, we have 3 points of data beyond the profile in itself. We have the POC, which is acronym for point of control. We also have the value area high and low. So we can use those to potentially execute in accordance with. So if we wanted to place a trade, we could execute a very definitive plan that says look for the primary supply POC inside of primary supply, which is also inside of secondary supply. So let me put this in simple terms. Execute on the primary supply point of control in a 60-minute supply zone, which is inside of a daily supply zone, okay? So again, I'll throw a different terminology. Enter it at the smaller time frame supply inside of larger time frame supply, specifically inside of the smaller time frame supplies at the point of control. So you can see we can define all of this information with grave specificity, and that's always the goal because we're mitigating risk. The idea is to always keep our risk small and reward large, and that's just our strategic method to it. I think it's probably most. So our goal there is for longevity. If we can look for large reward, small risk, well, even if we're wrong 50% of the time, we still are setting ourselves up for grave success. So we don't want to go into it thinking we're going to be right the majority of the time, although we hopefully are. But again, the idea is to set ourselves up so that even in a poor trading condition, and that's to say maybe we lose a little bit more than we win, our win rate goes down, maybe something like that, we're still setting ourselves up for success, okay? So again, just strategic. It's exactly like the individuals who end up around the poker table every year. You tend to see the same people. How is that? Well, it's not because they're lucky. It's because they're strategic and they know exactly what to do to get there. So they are the best, which a lot of great companies out there. So I don't want to use the term best in that regard, but I will use it in the championship situation. Those are the best, and they arrive at the table somehow every year, and the answer to that is always the same. It's because they have a very strategic and or methodical approach to it. Okay, so then we could, as I said, build that trade plan, and this is just a marker showing where that would actually occur. So when you touch that POC, point of control, inside of the smaller time frame supply, which is also inside of the larger time frame supply, that would indicate a short entry, and therefore we would take that short position. So once you've done all that, you've built your trade plan, right? And you've gone through and you said, okay, this is what I want to do. I've tested it thoroughly. Of course, the strategy is fully automated, so we will talk about that. But we can, grab numbers. We can actually test those theories, things to that extent, right? Once we've done that, it is indeed time to make our trade decisions, of course, right? At one point, we're going to have to go, okay, well, it's time to get started now. So once we're ready, we're going to go right, we're going to go left, or we're going to go neither or both. And once we've made those determinations, it's time to get started. All right, so now we're going to move into the order management data points because, again, once we've made our, we've concluded our trade plan, if you will, we have to have the ability to submit orders, right? So the zone suite has pre-built in a massive amount of functionality. In fact, we just had a release this week, I think two or 3 days ago, all covered in the documentation and release notes. Super excited about this. I'll show you on the price chart as we get out there some of the latest enhancements, and you also see them on the next slide, or one of the next slides. So here we have, you can see here, we have multiple data points, okay? Number one, we have a supply stop. We have an entry, trigger line. I'm going to stop there for a moment. Trigger line is where we automate our stop moving from where it is currently beyond the entry point. In other words, we're going to move it to protect our investment at break even plus commissions, and we can make that plus amount whatever we want. So we can move it 1 tick in favor, 20 ticks, 10 ticks, whatever we want. But suffice to say, we can then protect our investment when that trigger line is reached. In addition to that, we have up to 3 targets. Okay, so target 1, 2, and 3 there. All of this can be manipulated anywhere on the price chart. So if we continue moving quickly, you'll be able to see all of this. All right, so I'm just bringing your attention and highlighting that for you there. These orders are submitted on the corresponding market. You might be thinking to yourself, why would he say that? Obviously, the orders are submitted on the corresponding market, but in our case, that's not actually true, okay? Because we have extensive functionality in our software. You'll understand what I mean in just a moment. So just remember that these orders that you're seeing here, yes, they're submitted, and they can be submitted on the corresponding market. That's to say, if I'm on the S&P futures, I can submit those orders to the S&P futures, okay? Let's look at the hedge orders, however, all right? So we have a stop. Of course, we have our entry, and the same thing here. Now, we do have all the same functionality. I just didn't display them on this chart, but we have trigger line as well as up to 3 targets, okay? But for some people, if you're implementing a hedge, you may not even want to have that bracket order. You may not want to have a stop and a target, right? So you could get rid of that and just execute a hedge entry, okay? So this is why it's important that I notated this previously. These orders they're not submitted on the corresponding market. Again, they're not on the corresponding market, okay? So these order labels are built on if then else conditions, which do act as triggers for the hedge order submission. So if I'm on the S&P futures contract in our previous hypothetical, I could submit orders to the gold market, okay? Or let's say I'm on an ETF and I'm submitting my corresponding orders, I could hedge that on a different market, all from, here's the key to it, the same chart, okay? So I don't have to leave my chart to execute an order on a different market, which is, I can't even begin to tell you how advantageous this has been for me and many others per the feedback, but I can speak for myself, and this has just been lovely because I do implement that quite a bit. So in case you don't know what it is, all right, if we wanted to apply hedging for protection, what is hedging? I'm going to move very quickly through this because this is not, I just wanted to dabble on this for you, but I'd rather get out to the live chart. So hedging is risk management strategy, right? It's something that can be implemented to offset your potential losses from a single investment or an entire portfolio. So it can act as a form of insurance on the investment in the event that it does not go in your favor. Hedging is used by many, many, many institutions, corporations, and individuals. Most hedging strategies involve a mixture of equities, options, and or futures, okay? So let's say, for example, one may have a large portfolio of equities, and of course they're exposed to exponential downside risk. So to mitigate this risk, he or she could short a relatable futures contract or sell an option call, right? So that would be hedging their portfolio. I'll give an example here. Investor has a long portfolio. In other words, they bought it expecting it to go higher, consisting of 5 of the top S&P 500 stocks: Microsoft, Apple, Amazon, Facebook, and Google. Investor, the individual, he or she, is now 100% exposed to the downside risk, and they could lose a substantial amount in the event of a down market. And we know that that's very possible these days at any time, right? So the investor, he or she, sells short an S&P futures contract to offset his or her potential losses. And as a result, in a down market, that investor, he or she, would gain profits from the short futures contract, which would help to offset those losses from the downside risk within the portfolio. Okay, so we're kind of flattening out ourselves, right? In a down market, we don't want to lose our money, okay? We're kind of trying to keep that simple. So I won't go too deep into hedging right now. Just wanted to let you know that that is pre-built into our software. So in conclusion, hedging may reduce the ROI in a consistent bullish market. In other words, if we're in an uptrending market, I wouldn't want to remain hedged all the time, because then I'm just taking away some of my, because I would be losing in my hedge position. I don't want to do that. However, if the sentiment were to turn bearish, now it's time for me to consider that. So the hedge position would be greatly beneficial and could save a lot of capital. Hedging can, of course, be applied to short and long-term trading. All right, so finally, we're getting to the final slides here. Push button order. This is one of the things in our latest release. We've altered the way that we submit and reset and all of that, our orders. In addition to that, we can now edit the quantity of orders directly from the chart. Give me just one moment, guys. There's some background noise. Let me shut this down. Okay, sorry about that. Hopefully this is a little bit better. So yes, we can do all of this directly from the chart as well, and I'll show you that on the live charts here just moments away. All right, but suffice to say, they are literally push buttons. So I don't, again, it's efficiency. I don't have to leave the chart. I can do it directly from said chart. All I have to do, one click of the mouse, my orders are submitted. The corresponding bracket orders are also submitted. So everything is taken care of for me, and I can move or manipulate these at my discretion anytime I want to. All right. And I'll just mention this really quickly. I always do. These are our alerts. We built in a very unique way of doing it so that you actually get real-time alerts. You can do that via text message, email, or audible alert. So all of that is built in, and you can see the user interface here, and you can kind of see those settings there on the right side. So all of this is just, again, audible alerts, and these are multiple alerts. You can get them on zone touches if you're retesting a supplier demand zone. If a new zone forms, you can set manual line alerts anywhere, so we can set those up for audible email as well as text messaging. Okay. All right, so that concludes the presentation as far as PowerPoint goes. And yes, I am going to circle back in just a little bit, and I have a wonderful offer for you guys, so at least I think it's wonderful, so I hope that you do as well. But we will come back to that. And also want to bring your attention to, again, the free event tomorrow. So go ahead and grab this if you want to screenshot it, or if you want to, write it, however you want to do it. It's very difficult with a PowerPoint screen share because you can't just click it, I don't think. But if you just take one moment, just copy that URL there. That's the most important part. So tomorrow is November the 20th, and we are going to be offering a follow-up presentation at 11 a.m. where we will be able to go into strategy performance, looking at numbers. We'll go through and we'll look at the actual trades. In fact, we're in one right now. You're going to be able to see that on the live charts here in just a moment. Strategy has put us long the market. So again, just copy that. So that's going to come in at purefinancialacademy.com/free-online-trading-education. So purefinancialacademy.com, free online trading education. All you got to do is go ahead and get registered. It's free, guys and gals. It's completely free. I'm not trying to sell you anything in this. I'm just simply saying you want to get registered for tomorrow's event. It's going to be pretty fun, and you'll get to see a lot more as we will not be limited on time. So hopefully you guys all have that screen captured or whatever you needed to do at this point. I'm going to go ahead and get out to the live charts, and we will come back to this so that I get you the offer as well. Okay, so here we go. Let's get out to those live charts. Now, I apologize in advance for kind of the disarray that you're seeing, but I didn't want to remove it because I want you to see how we really do things. For all intensive purposes, this is all from morning session. I never remove lines. I always use what we call a rinse and repeat process, and that's to say that we go through, we do our analysis, we conclude potential and hypothetical trade setups. I say that because it's for educational purposes only, never recommendation or solicitation of any kind to buy or sell anything. Suffice to say, we are a learning environment, right? And then we can just kind of follow along, and you can do with the information what you will. So that's what you're seeing. We go through, we do analysis, we point out and refine exactly the levels and so on and so forth, building on the trade plan, if you will. And then from that point forward, we rinse it and repeat it. Well, I should say there's 3 steps actually. We recap it, then we rinse and repeat. Okay, so it's important because in our opinion, seeing is believing. Okay, and so we always tell people, look, we don't want you to trust us. That's not, you will eventually, we do of course, but we don't want you to until you've made that conclusion. So by doing it over and over and over again and utilizing the process in which we take via recap, rinse and repeat, recap, rinse and repeat. That's how you build your belief. That's how you build your confidence. We focus a lot on psychology, how to overcome hurdles, things to that extent. But ultimately, at the end of the day, I think we would all agree that the idea to get from point A to point B is to build confidence. And if we don't have confidence in something, it's a million times more difficult to do it, because at the end of the day, we have to eventually open our mind up and accept what is being provided to us, right? So if we go into something with a negative thought process or closed-minded, so to speak, we're not going to interpret the data in a sufficient way. Okay, so definitely want to do that, and that's our process. So over and over again. Again, those are the lines that you're seeing on the chart. We'll pop over here. Okay, so now we're looking at the strategy, right? And we could go back and all these trades, and that's from the strategy. You get the point. But ultimately, as I said before, the strategy has, just as of today, put us into a long position, as you can see there. Now, what's important here is that this position, like every position, always discussed in advance. I believe this one was discussed 2 days in 2 or 3. So today being third, so it was Tuesday in our live room. So 2 days in advance. The one before that, I'll just open up the chart here. So the one before that came in here, right? So as you can see, we took a long position at 32.37 3/4, which was right down here. And that was a 4-to-1 risk to reward ratio, which is what you're seeing consistently across the board. Again, we talked earlier about the reward. It has to be much greater than the risk to sustain long-term abilities for success, right? Okay, so we implement a 4-to-1 risk to reward ratio. And what you're seeing here, let's go ahead and break this whole trade down, because you're now seeing it in real time. This trade has just been submitted today. So it's perfect timing. But what you're seeing here is 10 contracts at 35.52 3/4. We have a stop order. That's to say, if we go down, we're going to submit to defeat and rather concede, if you will, and say, okay, I get it. I was wrong, and I'm going to accept that loss, which comes in at 35.12 3/4. Conversely, if price continues as desired, it's going to go up. We're going to hit 36.32 3/4. Our stop is thereby going to move up to our break-even point plus those commissions, roughly 2.5 points, okay, on the S&P. So we're going to move in favor, and that way we can't lose money on the trade, okay? But you're thinking, where's that target? Well, it's hiding up there. There it is, okay? So this is our entire trade here. And again, it's great because you guys are getting to see this in the real time. Win or lose, I always like to put this out there for you all to see, because it's important that number one, we understand we don't get it right every time, but that's not our goal. Our goal is for longevity, right? To be able to actually do this realistically and successfully for an extended, hopefully forever, right? We don't want that to ever change. So we have to be able to be dynamic and find something that's going to work over the long haul. And in our opinion, take with this what you will, but I think you'll find it to be very true that one of the predominant ways of doing that is by using that strategic approach. Again, larger reward, very small risk. So in this case, we're going to protect investment at 2-to-1, profit target at 4-to-1, risk versus reward. Okay. Now, with the zone suite, I did mention, I'm not going to mess with this chart here because that is the strategy running. So again, that's automated and it's going to handle all of that. I don't need to do anything there. So what I want to do is go to another chart. So this was the S&P, by the way, in case you guys are wondering. This is the S&P futures contract, or I should say the E-mini S&P futures contract, the December expiration. Okay, we'll then move into the 03 or March contract there in December. So I'm just going to move over, however, this is MES, which is the same market, it's the S&P, but it is a micro version. It is it's divisible by 10. So anything that happens on the S&P is going to be $12.50 per tick or per increment it moves in favor. And when you go to the micro version of it, you just divide that by 10. And then you end up with $1.25 per tick, right? So everything is divisible by 10 here. Okay. Most excellent. I love the micro, by the way. I love the micro futures. I've really enjoyed trading it. There's a lot of benefits to it. You know, hedging and just general trading. You can use multiple contracts, whereas you might not be able to on the E-mini. There's a lot of benefits to it. So let's go here for all intents and purposes. We had a demand zone printed just yesterday, and unfortunately, now again, I should specify these lines that you're seeing here are coming from our analysis in the live room, okay? We use our software for all the levels and so on, but what we do is we take a manual approach because we want people to understand how to do this, not just be reliant on a piece of software, all right? So yes, the software is there, absolutely, but it's imperative that we understand everything that the software is doing. So theoretically, we could, replicate our methodology, okay? In other words, if we don't have the software one day, we could go in and manually define our levels and things to that extent. Very methodical, okay? Very methodical. Can't be subjective. So that's, again, what you're seeing here. Let's look at some options, right? Let's look at some, not literal options, but I mean the software options here. So let's take and say, for all intents and purposes, I just want to buy the market. So some convenience factors here, and again, there are many, many, many things built in, as you can see here, to our software. You're seeing one set of zones here, okay? But if I go into my settings, I can simply enable my secondary zones as well and define exactly what I want those to be. Right now, I'm going to leave it just with one. We're perfectly fine because I really want to focus more on the order management. So I was talking to you earlier about the corresponding market versus other markets. If I go here, let's just, for all intents and purposes, say that this had not happened yet, right? So maybe we did something like this and we're just heading down to this 35, 36 level and we're going, okay, great, there's my demand and I want to execute a long order, okay? Well, number one, we can do that directly from the zones in themselves, okay? So we could go here and I could just literally click a button and then all of my orders are displayed. As I mentioned, we can, manipulate those any way we want. So I can take my targets, move them anywhere I want. I could take my trigger line, my stop. Again, all of that is, very user-friendly and you can manipulate it if desired. And let's say I made a mistake. I really don't like what I just did, which in this case, I would feel that way. So here's what I'm going to do. I'm going to left-click, reset those orders, and it's going to go back to exactly how it was. Okay, so I'm just going to disable those, and I'll turn the zones off temporarily. So let's say, though, that I wanted to do something a different way. Let's say that I wanted to submit an order based on a manual level that I've derived or any other reason. Maybe you have some other indicator that you use or something to that extent. So what I can do is go grab my entry menu and I can simply select, we have multiple, but I'm just going to use the buy entry for now. And I can manipulate that however I desire. Okay, so in this case, I may go down here, put my stop below the structure, okay, and then pull this in and enter on my demand zone. But you know what? I really don't want to trade 10 contracts, okay? So what I can do is just literally click my button here and I can trade as many contracts as I want or as few, right? So, I don't want to trade 5. I really, I'm thinking 6. So whatever it is, it's a push button situation. And if I don't like it, I simply have to reset that at any time. Now, if I do like it and it's exactly what I want, as it always should be, then when I am ready, I can left click and my order is submitted directly from the chart. If I at any time want to cancel, I have multiple options of doing so, but the most optimal would be literally just to go click the X button. Conversely, I could go back to my menu and cancel those orders directly from there as well. Okay, so again, those orders are on the corresponding chart. That would be the micro S&P futures. And in this case, I could pull in my hedge order if I hover there. It says hedge entry menu. So in my settings, I can define if I wanted to hedge said position, I could pull in a hedge, or if it goes against me for all intents and purposes, I can go down here and hedge against that. Let's put it where I can easily click it. And I can submit that. But notice now you're going to see a label indicating your live hedge entry will be submitted as soon as that is touched, right? Okay, absolutely. So when this is touched, the hedge position is going to be executed, and so on. We can go back up there and we can cancel out that order. So a lot of bells and whistles here. Why don't we take a moment to answer some questions? And I can also just kind of look, I will define, if you guys want really fast, because I only have about 7 minutes left, get some Q&A, some questions, and then also if you guys wanted to look at some of our recent examples, we do have a couple of levels here. I'll specifically watch out for this 34.25 to the downside. This level, unfortunately, has been attempted now multiple times. There is a high probability that this level will be broken. We will most likely find support in this following level, 35.05 quarter, 34.79 quarter. I'm sorry, 34.79 3/4. So we will most likely find some support in through there, but given the location and everything, I'd be more optimal. As if I were actually going to buy, I'd be looking for a lower level in myself, because again, of the larger picture, location is certainly not optimal right now, and that's why we're hedging this position as of current. Okay, just to be out there transparent with you. So not loving the location, all-time highs. We're saying, okay, we're very willing to go buy this market, but we're going to protect that investment on the downside as well. So if it goes against us, we're going to be hedging on the downside so we don't lose our capital. Okay, we'll talk more about this in the room tomorrow. No worries. All right, we've looked at several others. So we have, for all intensive purposes, like I just showed on that the S&P there. Gold, we've been waiting for this lower level for quite some time. It'll be displayed over here. So we have a level coming in about 18.14.20. We can also look at Apple. We did have a recent Apple trade. So our recent Apple trade came in at 114.94s. That, of course, as you can see, has panned out very well. It's a nice little trade. And we're also looking for more support to come in down around that 108 if we were to arrive back down there. The NASDAQ, okay, so we had a supply zone to which we were anticipating price to fall away. It didn't quite make it there. And then also today we had a demand zone come in 11,759s, and that too was not quite reached. It may make it down there today. So we would likely expect a bit of a bounce from 11,759. But again, very important, we understand the location is not optimal here based on the bigger picture outlook. Okay, so a lot of things we'll be pointing out. If you want to join the room tomorrow, we'll get all of that information to you. Let me get this information back up before I run out of time here. I do have a tendency to do that. I do sincerely apologize. Okay, so here we go again, free event tomorrow. We'll be looking at the automation. We'll run through, performance and so on and so forth, all that fun stuff. Go ahead and notate that and it's free registration, no problem. We'll see you there hopefully tomorrow. And I wanted to get the offer out to you. So there's going to be a few different offers here. I'll be happy to discuss them. Just contact us via our website at, you can, up at the very top of our website, at the top right, there's a contact us link. Submit any questions that you have. We'll get right back to you. And we try to be very responsive and prompt on that. But you also might want to notate this URL here, okay? So this is purefinancialacademy.com/supply, add the hyphens in, of course, supply, demand, trading, community. So if you wanted to get our software with the hedger included, we're going to discount that substantially. So from $19.96, which would be the general cost, we'll discount that to $14.97. So on this link here, if you visit that page, you will see a PFA Zone Suite option. Okay, if you click the Buy Now button, you will be directed to the invoice, of course, and no code necessary. You can go ahead and type that in, and then we will automatically update your license for you and include the $499 hedger at no cost. So that comes in at $14.97. Again, you want to grab that link there. And then the other two options that we have, we only offer one program. We break it into two different options, the yearly and or a lifetime option. So as the offer goes today, we're going to provide you with a year of the PFA community, and we're going to knock that from $19.99 down to $17.99.10. And then we also are going to offer on the lifetime community with the hedger included, normal price being $54.98. We're going to bring that down to $43.98.40. So these are not my favorite moments. I don't like doing huge sales pitches or anything like that, but at the end of the day, I'm happy to offer them. And more importantly, I am very confident that we can help you. So give us a call. Don't just jump at anything. Let us have a conversation, and we're happy to help any way that we can. Even if you don't make a purchase, it's okay. It's not that's no problem. We're still happy to help you if you have questions, okay? All right, so your discount code there, make note of this, Investor Expo. Go ahead and put that in on the, for if you decide to go with the yearly or the lifetime community, do indeed use that discount code there, Investor Expo, and we will make sure to get all of those discounts applied appropriately. Okay, so let me see how I can make this work here. Give me just 1 second. No, okay, quite great question. Does it work with TradeStation? No, we're NinjaTrader 8 compatible. Unfortunately, TradeStation's coding is very limiting, and our software goes far beyond what that was capable of, so we stopped the coding, unfortunately. Yeah, we just didn't move forward with that because it was so limiting, and we needed more functionality. Good question there. Thank you for that, Chris. Okay, let's see. You know what, Gene, absolutely. I would love to look at the gold ETF, so jump into that free session tomorrow, and absolutely we will look at gold. It's a great time to look at gold. I did look at the futures, but I'm going to absolutely do that for you. Just make sure you get into our free session tomorrow, okay? Yeah, great. No, that's absolutely, you're coming across as member there. I trade Forex 100%. So our software, our methodology, everything is applicable on Forex, equities, futures, options, and so on. We don't trade options, I will tell you, but our methodology is applicable, and I can explain that further tomorrow. Oh, great, Gene. Yeah, I see you're on the ball, I tell you. Good job with that. Is the license perpetual or does it need to be renewed every year? Great question, EG. No, so that is going to be what we consider a lifetime license, right? Absolutely. So there's a one-time cost for that. I will tell you up front because I always like to be up front and I don't like it when you get hit with fees in the back end. So the only thing that we ever request of you is a maintenance fee, and the only time that is only if you want to do it. So obviously, like any software development company, we update our software frequently, add new features, bells and whistles, things like that. And the way that that works is we knock off 80%. So you're only paying a very small fee. But again, the license is a lifetime license. So once you purchase it, no requirement to update. You can use it for 3, 4, 5 years, whatever. And then if you wanted to update, you could. And then it would only be just a very small maintenance fee at your convenience. Okay, I'm up on time. Thank you all so much. I want to get your questions answered, so contact us. God bless you all. Thank you, everyone at Investor Expos. Thank you, everyone, for your participation. And I hope you thoroughly enjoy the remaining sessions that are coming up. Sounds like you guys have some great presenters. Thank you very much.
So welcome, everybody. Audio, video, please confirm if it's good. Let me know, please.
The screen looks good to me. You have 45 minutes. Thank you, Simon.
Excellent. Thank you. Good. Okay, thank you. No, this webinar or this presentation will be about probably mostly about how to benefit from the membership that we offer and the education that we offer. I'll also educate you on the volume profile, but it's not enough really. It's 1 hour, it's 45 minutes, mostly probably 35 minutes will be education. But to start with, we have 2 titles to cover. One of them is achieve 1,000 ticks or pips per month, and we've been achieving that easily per month through the swing trade calls that I've been calling on the futures and the Forex. Also, damages caused by online reviews. The reason why I want to talk about this first, damages caused by online reviews, is because we live in in an era of really online. Everything is done online. Everything is done via media. Let me just quickly stop my charts because they are giving me background noise. And I want to emphasize on 1 second here on that, because simply regardless of the reviews and regardless of what you hear or see, good or bad, doesn't matter. You should seek trial. You should try anything that you want to basically buy. Even if you buy a car, you go for a car test, you're gonna road test, you drive it. Same thing with us. First of all, we don't allow memberships like this. We don't allow you to come in and buy right away. You have to go for a trial, through a trial. Last thing I want to do is you buy according to, let's say, something great you heard about me online, and vice versa. You need to come in and try, and we offer full trials. So that being said, one second, what am I doing here? There's a piece that is missing to move the slide further. Where is it? Can't find it. Just give me a second. Again, folks, I was in the middle of a presentation. Sorry, my trading session. So that's why I'm a bit slow. We are actually short on the NASDAQ, so that's why. The damages caused by online reviews. Here are some questions that you ask yourself. Do you base all your decisions on other people's opinion or reviews? I certainly hope not. How long do you think companies or businesses will remain in business if they only offer bad products or services? And I'm saying this because I've been in this since 2000, just after maybe 2000, mid 2000s. Okay, and I'll show you some pictures from my old days too. Why do negative reviews interest us more than the positive ones? Why do we agree with them without knowing the product, without knowing the facts? Why are we willing to hurry up and write a bad review about one company, but we neglect writing good reviews about many more companies that serve us well? Notice you go to a place and you don't like the attitude of the teller or of the server or the company. You come home or it's right there on your car, in your car, you're gonna pick up your phone and write a bad review. Meanwhile, you maybe see many other companies that are good, and you neglect writing a good review. Okay? Why do companies have to beg their clients for good reviews? Meanwhile, if a client is ready to give a bad review for any silly reason. Okay? I saw this in one of the reviews on Amazon. We bought bedsheet and they were great, amazing, very good, price and quality and everything. I saw somebody given the bed sheets a bad review saying, "Oh, the bed sheet came out wrinkled." Came out wrinkled? For God's sake, it's a bed sheet. Okay, how many people or companies are being sued by the CFTC? And I'm saying this because I've gone for the past 4 years. I've been going through an issue with the CFTC back and forth, just stupid stuff. Okay, and I have it on my website for details if anybody's interested. Who wins cases against the CFTC? And how long are they willing to have it linger on? Right? Will it make a difference if you knew what I was being sued for or accused of? Or you're interested in the fine print? Okay, so there's a lot of things, folks, happening. And next thing, I want you to know about my website. First of all, I told you nobody's allowed to come in and buy immediately. That's why today I'm not going to sell anything, because selling is a process. You come in, you join, get free access. You get access to all of our channels. First of all, you get access to this one. Welcome to TTI. This is a free channel. Once you go to the website, you click Get Started. You see it will prompt you to access Telegram, which is a very easy to use software. App. You can have it on your phone. You can have it on your screen. And you can have them both running at the same time, right? So once you join us here, you can easily see some of our calls, some of our videos we can share, and you can private message me, private message my staff. And then once you ask for a trial, a full trial, we'll give you access to everything. To everything, okay? Including the live trade room, which I just closed before getting into this webinar. with my students. So technically, I'm not going to be selling anything. I will offer you a trial first. That's why I'm not going to talk about our pricing and anything like that. It's available on the website. One thing about me is I'd like you to know about my past, my current, everything. So I did a video with my members after my case was finished with the CFTC. There's a 30-minute video here. Please watch it. I encourage you to watch it because there's nothing to hide really. But I want you to know the facts, and I'm not breaking any what do you call it? Any laws, because by law I'm not allowed to deny anything. And I mentioned in the video, it is what it is. It happened, but it happens. You need to watch the video. It's a 30-minute video. Please watch it. More important things about my website is that if you go to resources, you go to education. Folks, I offer for free top-notch education for anybody who's interested. So if you click on education, you'll get to this page. Okay? I have a previous webinar similar to this. I have a video that was done by a very professional doctor, Dr. Kenneth Reed, about the psychology of traders, and it's called Adult ADD. Folks, I joke about this every time I do a presentation, but I really mean it. Unless you're getting married today, if you have not watched this video, please watch it. Okay? Send me a note after. Tell me how you like it. It's one of the most important things that you will watch and you will listen to as a trader. Okay? This is a hit. You have to watch it. There's another video similar to this at the bottom here. It's very similar to that. This is newer. This was done in 2016. This is 2014. Okay? There are videos about volume profile, which you need to watch. There are videos about our SAL indicator, the attraction levels, and how we are getting into massive trades using this SAL indicator. 1,000 ticks a month, it's really not a big deal. Really not. And I will explain to you a few calls that we've done. Okay? And there are multiple videos that you will really enjoy to watch. Okay? Once you join us, let me go back to the presentation. In 2001, I started with Forex, folks, and then I switched to futures, but I was still doing currencies in the futures market. 2005, I spent 6 months and trying to understand the numbers on the tape. This is the core of the whole system, but I don't use the tape anymore. I minimized it, I reduced it to a level that you just see some lines on the chart to show you where the pressure is. I incorporated this in a very advanced indicator besides the volume profile. Sorry. I developed a price magnet indicator. I was able to achieve a lot of things using this tape. I was teaching about end of buying, end of selling, unfinished business, capping, traps, point of control, etc. I was one of the pioneers in the modern tape reading. I'm not talking about the old style. I'm talking about the new ones. That software was available in early 2000s, right? Now, you see some of the pictures of the old days. Sorry, going too fast. See that? See that? These are local. I had done also US. This is in Colorado. This is in Las Vegas. I have done more. If you have Google pictures or something like that, you will get memories every now and then. Every day you get memories happening this day. So I think today or yesterday I got pictures from my Las Vegas trip when I did this. I did this webinar, so I had multiple pictures and I was looking at them. So going back to business, how do we trade? Before I do that, let me show you one thing. Today, the charts are now not working. I paused them, no connection, because it gives me the audio. When these lines touching, it gives me audio. So, you know what? Let me just do this. I can remove this audio and I can start them. Okay. So today, what I did this morning, first thing in the morning, I do top-down analysis. And let's focus on maybe one instrument. And that maybe it's the NASDAQ. Today, it happened today. Yesterday was the gold, today is the NASDAQ. So first thing in the morning, folks, if you pay attention, please, to the 19th, see this 19th of November? First thing in the morning, I said today, markets look bearish, indices look bearish, but bearish not immediately, because this is when the market opened, right here. And you see me, I really literally called it long from here, and I called it long from here and from here 3 times on the NASDAQ. I was not filled in 2, and I was filled in 1, got some profits, and then was stopped out because it was a scalp. I was looking for scalping. But I told my members, NASDAQ, I wanted to see, this is at 857, which is around here, see at the bottom. I said, NASDAQ, I wanted to go around to 11940 area, or because my stop loss are in this area. And I mentioned to them. So although I'm looking for a short on the NASDAQ, for the swing short, because my targets are way below this chart, below here, I was looking for it to go up first and then down. And sure enough, it got to a very prominent level right here, and I called it short. See, from this area, from this line, I called it short. I was looking for a continuation zone. It did go 120 ticks in favor. We got first target, which was a big first target. We moved the stop loss to break even, and then NASDAQ was crazy. It moved up, took the stop loss. Again, it was not a complete success in terms of a runner, but the NASDAQ found another level here. How do I know all this? How do I see it? I called it again. I said 64 is your next stop loss. So 64 is right above here. And I called it again, and I mentioned to them, see? Of course, when I do that, I also pull this the areas. So again, when this runner was stopped out, I told them I'm looking at 64, my next stop. See that? So if you go in at 47 or better or 50, it's good. Again, we got another 100, over 100 ticks move down in favor, right? But I'm still looking for it to come back down. It's been a very tough week, folks. If you traded the indices, it's been very tough. For us, I don't call trades unless I see exactly where my stop loss is. I confirm. So that being said, going back to this, anticipate, confirm, execute. That's how I call my trades. I anticipate the move. First of all, I anticipate my move. Hey, this did not stop. All right. Let me just close window. So anticipate, confirm, execute. I anticipate the move before it happens. So if I'm looking for a long, I will look for a long, and then I will confirm it after that. So how does it work? You saw the volume profile on the charts, correct? For example, if you look at the for example here on the right hand side, you see the volume profile, you see how it works, and if you see the daily, you see the daily how it works. You see how the market is going towards this magenta. Come on, it's slow. Let me stop the data feed. You see how the market is attracted, is given as a hard time, is attracted to this magenta line upper at above 12,000 area. You see that? So this is where my idea would be like, you know what, if you're short, careful, it might go to this magenta line, which is the attraction, the main attraction level. Bottom line is we have a volume profile, very prominent indicator that we can go to the 5 days, which is the weekly. I go to the daily, I go to the hourly, and that will give me the idea, an idea of where the market wants to go in terms of anticipation. So I'm anticipating, for example, a short on the NASDAQ, but not randomly, folks. I'll show you. If I'm anticipating a short on the NASDAQ, the market goes up to a certain level. So this is my level of a short. Okay, this is the level. It could be between maybe 10, 15, 20, 30 ticks. And if it goes to a different level, if it goes here, if it touches here, it's going to change direction. It's going to go up. How do I see this? Volume profile is nothing but zones, different zones. There is a zone here. We call this a continuation zone. There's another zone below it. It's a different zone, but still continuation. And there's another zone probably above this. It's continuation. Okay? So we have continuation, in between, you see rejections. Rejection, rejection. So if I'm looking for a short on the NASDAQ, this is the zone that I'm looking to short from. Why would I short it from here? No, because my stop loss will be all the way above this line. So as an example for you to understand this, okay? Let me give you an example to understand this whole thing. You are looking for a trade. For example, the market is trending up. All right, the market is trending up. This is, for example, this is the gold. Just an example. And you say, okay, the gold's going to go up because you learned how to maybe trade using technical analysis or other systems. You think because it's trending, you're going to just go up. You say, okay, now it has to, I learned how to trade Fibonacci's, for example. So I'll wait for it to come back down to 50% retracement, right? Or maybe better, somebody told me to go to, what is it, 68% retracement. And you don't know, you wait for it. It goes up a little bit, comes back down. You take it long from here. Your stop loss is 30 ticks randomly. You get stopped out. It comes back here. You take it again. You get stopped out. And then it goes back up. It goes back up. You say, oh, I don't want to miss it because I know it's going to go up. See, it did not break the previous low. It goes, you take it. As soon as you take it, it comes back down, stops you out. Now you say, no. It broke the low. Let me go short. You take it short. It goes up, stops you out, and then goes back down short. So it's crazy, really crazy if you depend on pure technical analysis. And I'm sure you know what I'm talking about. Unless you have some kind of a volume, some kind of a assurances in the volume and who's coming in, buyers, sellers, who's in the market, who's more interested in the next move. Where's your rejection? Where's your stop loss? You don't know. Now let me do the same scenario, but this time I learned volume profile. So I learned volume profile. So this is my zones. This is my continuation zone, right? This is my continuation zone 1. This is my continuation zone 2. And this is my continuation zone 3. Okay? Going back, the market goes up. I'm sorry. The market goes up. And this is your rejection that you learned, but you're looking for a long. You're looking for a long. You're not looking for a short. That's fine. Maybe you're not an advanced trader yet. You're looking for a long only because it's going up. So are you going to long it from here at 50%? Now you learned volume profile. This is continuation zone. So you would say, no, why would I do this? Why would I go long from here? And this is a continuation zone. So it might continue down all the way to the bottom. And this is your 68% retracement. Are you going to take it from here? You would say, maybe possible, but look, it can come back down here to this rejection level first. So automatically you will ignore the Fibonacci levels, right? So it comes back down here, and you long it from here. You take it long. Now, do you think that is the only thing you learn with volume profile? No. You will learn the following too. You will learn that this is 1, this is 2, and this is 3. Where would your stop loss be? Folks, automatically you will know that your stop loss has to be no lower than the red. Why? Because if it goes in your favor almost all the time, if you know how to use this volume profile the way I'm teaching it, you will get your first target. Okay, so once you get your first target, your stop loss is here, market comes back down, your stop loss, you stopped out, still overall a profitable trade because we do 3 contracts or multiples of 3s. So if you take first two, go out with T1. So if you made 15 ticks, which means you made 30 ticks, first 2 contracts. So now you have 30 ticks in profit. Your stop loss is 15 ticks. So you're still going to be on the runner. So you're still going to be 15 ticks profitable. For example, you will learn that if it goes below the red, it's not good to hold it long. You will know that. You'll know your stop loss, the market is going to come back down to the green and to the blue easily, right? So that's that's how you should be looking at the markets, folks. It's not only the direction, but you have to anticipate the market. You have to confirm. When it gets here, do you think I would just call it randomly? I always tell my students, you know what? You have to wait for it. You have to wait for the confirmation, because if you set up your indicator properly, and I'll show you, if you set up your indicator properly, for example, the SAL indicator, I have 20. So I have 20 levels embedded inside, you can do up to 50, but I have 20 levels embedded inside this NASDAQ, okay? Inside this NASDAQ chart, that the 20 heaviest prices or levels that have pending or pressure volume are going to be showing up. They are going to show up as magenta lines. You can change the color, up to you. You can change the thickness too. But you'll have 20. Now, for example, you have 20 lined up between all of these areas. See this? These are the pressure levels that the market is attracted to, and it also can work as rejection too. It's attraction and rejection at the same time. All right? Now, that being said, out of the 20 levels, 20 are showing here. You have another level. For example, this was 100,000 contract, for example, or 10,000 contract, for example. And this is the smallest one. Another level comes up, another area shows 10,001 contracts. This will disappear and the new one will show up. Hence the flashing. Sometimes they will flash. They will flash and disappear and they move because a bigger trader or bigger level came into the picture. You understand? It's very straightforward indicator, but you have to combine it with volume profile. It is one of the most important indicators that you should be using. You need to know the volume. You need to know who's trading. Market makers are controlling the market. You have to be aware of that, right? I had a call on gold. This is, let me grab the data feed again. If you look at my gold channel, okay, this is my gold channel. And this is from days ago. See, kept saying, I want the gold to come down below this line. Now, did I call it long? No, I never called it long. I wanted to go short below this line. Again, I said, I want to get a short. Look at the confirmation that we had. Magenta line. Short all the way to 1820 level. Okay, and I called exact entry, exact. Now the gold is at 220 ticks move in our favor since yesterday. All right, this was the trade call. Right from 1880. Right from here, short. Okay, I'm looking for it to come back even lower. So I anticipated the gold, confirm, execute. I'm looking for a big move all the way down to, folks, 1820 level. You see? All the way down to 1820 level, or even a bit lower. So looking at maybe 500-600 ticks move. All right. So anticipation is key. Another example, we had a call on nat gas yesterday. Nat gas, I called it long from here. From here, we had a nice 50-60 ticks move in favor. We took first target, and then I told everybody, I saw something funny happening with the volume below. Look at my nat gas. Yesterday, this is yesterday, I said NG, nat gas, I don't like the stop at 2.6. Safer to move it up to entry. So after we took our first target, I told everybody to move stop loss at to the entry. Why? It wasn't random, folks. I saw some flashing. I saw some interest at the bottom here, right? And sure enough, it came back down. And of course, I like to keep runners. That's me. I have a lot of students who will follow everything tick for tick. They will just follow the system. Because once we get runners, we get like 500, 600, 1,000 ticks. I had runners for 2,500 ticks. All right. But some students are different. Some members are different. They will say, okay, I made 100 ticks. I'm good. I'm enough. So they get out. So, but the system is there. And even when you get out, you don't get out randomly. You will get out according to the teaching. The volume profile is teaching you how to hold a runner, where to exit, right? Very simple, very simple. I'll tell you this. Look at this at 11:17 a.m., an hour ago, 2 minutes less than an hour. I said 11,920 NASDAQ is a hiccup. Look at this. Do you want to see something funny? This is 11,920 here, right here, this price. Right here. You see? It's a hiccup. And look at the price. Look at the time, 11:17, 11:15, right here at the bottom. I said it's a hiccup. I was short. We were 120 ticks in profit. I came and I said to everybody, we have a hiccup at this price. Guess what? Whomever cares about keeping their profit after taking the first target and moving the stop to break even, they got out. Okay? I honestly thought it's a hiccup. It's gonna lift it up. I didn't expect it to poke, but once it poked, it showed me another entry level, which we got another 100 ticks move out of it. It did not sustain itself. See, it went back up again. So there's a demand to maybe either bring it up from here, because this is now playing as a do or die level. So this is my do or die level now. And now I'm sitting on my hands. We call it, it's a very common phrase we use in the room with my students, HUB, hands under the bun. All right? So we are HUB now on indices, right? And although I'm looking for a massive short, but it's poking above, it's poking, it's taking, like it's giving us 100, 120 ticks move in our favor, and then it's going back to the stop loss. So regardless, we are now gonna sit on our hands. I'm looking at a bigger picture. Hopefully I'll catch, because I am still really looking for that big swing short on the NASDAQ. If it happens, I'll be my best to be in it. If it doesn't happen, no harm done. We just got a couple of winning trades. Small wins, but still good. We have the gold running in our favor, and I'm expecting that to give us nice moves. Okay, going back. You know, not to brag really, but you need to come and see. There is a lot to learn. Students love the fact that they're not only learning how to anticipate, how to confirm, also they are learning to really sit back and relax, and if it's not there, it's not there. You don't push trades. We have scalpers, we have swing traders, we have different kind of traders. We have some people who would take a trade with options. It's a swing trade, so why not use the options to benefit from it, right? Common sense. It makes sense. And this is, I mean, you see, insane Simon, great trading. I mean, I get these notes every time, every day. It's very complimenting, but nothing is random, folks. I'm working so hard on monitoring everything. See, look at this. We have a look. Tom is saying, cool, great call, worked beautifully. We have a channel. This to let you know how transparent we are. Okay. We have a channel for all members to join. So once you join us on this channel, which is Welcome to TTI, it's available to you. I have over 6,000 subscribers now. But once you join us, you can simply ask us for a trial. First thing you will notice that you're going to be, chatting with other members too. Some of them have been with me since early days. I'm talking about maybe 14, 15 years now. Some of them 6 years, 7 years, 8 years. They stuck with me and they helped me. They supported me all the time because they know it's not about just, it's not one way. It's both of us. We have to help each other. You have to, if I tell you, once you join us, once you become a full member after the trial, if I tell you that there is a learning process, look at this. Look at this. You get the monthly rooms and you get level 1. This is your level 1 of education. It explains all the indicators, explains how to get into them, how to use them. See, step by step, each indicator alone. See that? Step 2. If I tell you you need to do this, so please do it. I mean, you joined me, you're paying me to learn. So you need to spend, this might take a week or 2 for you to cover all the videos. It's not about only covering the videos, folks. I am here. I answer questions. We have the live room. We have the live trade room. We have the Telegram. You can private message me. You see, I have so many private messages from different members as well, right? So, and then you come to level 2, and then level 3. Level 3 is very important. This is where the heavy stuff starts. Crash course on volume profile, advanced examples. This is the heavy stuff. And then level 3, a bit more refined. See that? What are the traps? Escaping value area. We have a very unique trade trigger. We call it poke out and poke back in. That you will learn that. It's escaping the value area. Examples I have. What is smart stop? Yeah, smart stops. I talked to you about the smart stop. Remember we talked about, your stop loss has to be at the red. That's a smart stop, because if you choose the green, that's not very smart, because once the red is taken, the green will be taken too. It's continuation zone. We talked about that too. And then you have the ACE method. The ACE, I told you, anticipate first. My first or second here. Anticipate, confirm, execute. Right? I told you my second slide or third slide was anticipate, confirm, execute. Top-down analysis. I do it for you because as a student or as a member, I will do my top-down analysis every morning. All right. Look at this. First thing in the morning, I will say, this is what I'm looking for. November 19. I'm looking for this. I'm looking for that. These are my stops. This is what I'm looking for. But these are not trade calls, folks. When I tell you I'm looking for NASDAQ or indices short, right? And 64 is my last point of defense, which is just here. You see on top? That's not a trade call. A trade call is when I tell you this is your entry, this is your stop, and this is your first target, and that's your last target. Correct? So that's how I work, and that's how I educate my members too. So now, if you folks have questions, let me see if I missed anything. Nothing, not really. It's very straightforward. Join, go to the room, go to the website. First, where's the website? Go to the website, traderinstitute.com. You have a handout for us, Anna. If you can post it to everybody, if you can give it to them, we have all the information available to you on one handout, which Anna will post to everybody.
Done.
Excellent, thank you. And just join, get started. Check out our YouTube channel; it's very important. I have many videos for you to enjoy. Other than that, now I'm open for questions. Please, anything you have. Karen Hayes. Sorry, one more. Although your call's extremely accurate and your level's precise, is this seasonal? Well, it's not seasonal, really. It's not. I don't trade seasonal. I don't have seasonal instruments. But it's crazy. Sometimes the market is crazy, Karen. If I don't find it, I don't even call it. I don't care. So I'll wait. Sometimes it's a choppy market. Sometimes, like a few days ago, I called a NASDAQ short or a trade on the NASDAQ, and I was 100% sure it's going to go in my favor. It actually stopped me out before it goes in my favor. So I don't get stopped out often, but once every now and then we will do. It's amazing that you wanted to go bearish. You still had a version, a couple of hundred. Yes. Exactly, Karen. Yeah. It's not. I mean, if I'm looking for a bearish move on the NASDAQ, but one thing my students know, I don't chase. It's a very common thing that we use in the room. And students know me. I don't chase. If I miss it, I miss it, because there's always another trade. And I look at the Aussie, the Canadian, the pound, the euro, the yen. So I have a full basket of instruments that I look for. Ninja Trader 8 volume profile. Yes, Rudy, it looks the same if you have it. I don't use Ninja because it's very slow. 4,500 ticks. Yes, in September we did that. 4,500 ticks. Yes. In October we did probably 3,000. Yeah. The pricing is on the website, but Better Trading, you probably need to join and talk to Daryl, our sales manager. There's always room for probably different plans. Sierra chart, yes. Sierra chart is a must. Even if you don't have it, if you cannot use it for trading, have it as a chart plotter, because my main indicator was this, the SAL. It could only be plotted on Sierra charts. Ninja Trader is very slow. Yes, that's why. For my charting, yes. What else? I have been following you for a month. Very impressed with your calls. I did a trial too, but I wasn't ready to join last month. My questions are, how long does it take to master this system? Well, I mentioned during my presentation that it takes maybe 2 weeks, maybe 3 weeks, depending on how serious you are, how much time you can spend on it. Yeah, that's it. And pricing, you can simply talk to Daryl, join us on a trial, and then talk to Daryl, see if he can do something, because we don't reject anybody. I mean, everybody's welcome, but we have to be reasonable as well. Yes, payments plans, I think they're available, but again, I don't deal with sales. I did, Chris, I did explain some of the volume profile. Yes, I did. And I have 2 more minutes. What does the blue line do? The blue line is my line, John. What do? I will go there. For example, I will put a line. Let's go back to the NASDAQ. I'll put a line on the NASDAQ. I will tell my members, this line is your trigger, right? And once it hits, actually, I will hear it in my ear. It's an indicator. See that? Alert. It will call NQ in my ears. So I would know that line hit. If I'm watching a different chart, I will know NQ hit. So I will go and find a trade. TOC, no, I don't use it, no. But again, if you don't use Sierra charts for trading, it's easy to acquire. You will see it's extremely beneficial to watch volume profile. This volume profile is a bit more dynamic. You see how you could enlarge it, minimize it, sharpen the edges. See? You see that? It's very dynamic. So it is very important. Okay? So please, again, I'll go back again. Go back to the traderinstitute.com. Join us. Join our Telegram, and we will see you in our trials. Thank you, everybody. Anna, thank you. If I missed anything, please join Telegram and private message me if you want, or email me.
Okay, I will get started. Thank you, Anna. Boy, Simon's a smart guy, isn't he? I love to listen to his presentations. I'm going to do something a little bit different than the other speakers that are in this extravaganza today. I deal with the areas that most traders don't want to talk about, and it's because it's not easy to tell a trader that they're losing and it's their own fault. I mean, that's really the bottom line of it, but it's hard to say because, I mean, it's not all of it. You need a trading plan. Most traders that we coach, that we talk to, that we have relationships with, from the most simpler relationship to our coaching relationships, they have pretty good trading plans. Some are better than others. Trading plans that can make money if they can only follow those trading plans, because that's the other half. In fact, most experienced traders will tell you the mental and emotional issues of trading is more than half. I'm going to give you some pointers today. I'm going to kind of make a very boring and avoidable area, mostly avoidable area, kind of at least interesting for you, in terms of 7 beliefs that hamper your trading success and how to change them. I think this presentation I've given every year, once or twice every year, because there are so many, in a world of fake news. They just came out with that the last 4 years, the idea of fake news, which so many traders forgive themselves for not paying attention to the mental and emotional issues. You see, the bottom line is that you really need to spend some time, maybe 20 minutes a day, a half hour a day, sometimes 15 minutes. We have a way of 7 minutes. I won't go into that, but just a focused time where you can get into your own head and plan how successful that you're going to be in that trading day. Plan the fact that you're going to follow your trading plan. Realize beforehand what your weaknesses are, what your strengths are, and look to amplify your strengths. Things like I always take every trade. I've bumped into traders that take 30, 40 trades a day, even more, that use 2-minute, 3-minute, 1-minute charts. That's a lot of work. It's a lot of, but that's their personality and it fits them. Others can't move like that. They don't have the kind of time to sit in front of the computer. Every trader is different. So you need to identify what you're good at and amplify the things that you're good at and numb, or you don't even have to reverse, but if you're not a patient person, for instance, you probably won't make a very good trader. Patience is an overall quality that you're going to need. So there's a lot of different things that you need to do to shake yourself out of this idea that if you approach your trading, if you approach the mental and emotional issues that are holding you back, that it means you're weak. It's very different from that. It's the opposite. It means you're strong. So let's get into it. These are 7 beliefs that hamper trading success. Now that's me. Why should you listen to me? I've been around trading almost 40 years now. I think it is 40 years now. Started in 1981. So it's going to be 40 years. And I've done a lot of things. There it is. I put it in writing. I've written several books. Most of them are about how to construct and design an effective trading plan. They're on, some of them are still on Amazon. But what I do in these books really is the first quarter or half of the book is all about identifying you as an individual and applying your strengths and weaknesses to the right kind of trading plan, the right kind of process to, again, amplify your strengths and minimize or sometimes reverse your weaknesses, okay? I'm a former CTA. I've managed millions for clients in the futures market. I spent time with Payne Weber, so I know that end of the industry. I headed up a division to help raise money for trading managed futures accounts. So I've been around, but probably the most substantial thing as far as improving my own trading is that I married a subconscious trainer. What does that mean? Well, I guess you can call it a hypnotist or a meditational expert or a subconscious trainer. It's somebody that helps you to ground yourself so that you can be focused and effective when you trade. If you can be focused and effective when you trade, you're going to stop missing trades. You're going to chase let's trade. You're not going to chase trades. You're going to allow, as Simon said before me, when a trade goes without you, you don't sit there looking for ways to get in that are beyond your trading plan. All professional traders, Simon, myself, anybody that's going to be presenting, I'm sure, does not chase trades. So you need to have all the assets working for you, and the main asset that you have working for you is the asset that is between your ears. So let's get started a little bit about the 7. There I am. I guess I'm married again. And in fact, I've been married. Next year will be 40 years. So it took me 6 months of knowing Tisha, my wife, to figure I better live the rest of my life with this person because everything is really turning around really well for me now that I'm paying attention to my brain and what's going on. Before that, I was a wild trader, making tens of thousands one week and giving it all back the next week. Things have changed for the better, and they can change for you too. Okay, the first belief is that if someone claims being a successful trader, then it means they're successful. Well, in the world of trading, it's really hard to tell fact from fiction. Some of the best copywriters in the world are hired to persuade information-seeking traders to try a trading system or trading indicator that'll lead them to easy profits. They say things like, trade just 10 minutes a day and make $30,000 a month, 90% winning trades, secret to trading success. These are just a few examples of what spewed across the internet and direct mail landscape to get us to spend our money so that we can achieve our dreams of financial independence. Are these claims real? And if not, how are these people allowed to make them believe that they are? Well, most of the time, the answer to these claims is they're kind of true. You'll find gurus who have a fantastic year in 2012, where they have 90% winning trades, and hasn't had a good year since then, and somehow that's not discussed until you pay your money. You may find, after looking deeper, that the results that they claim are hypothetical, or they're back-tested results, meaning that nobody's ever placed an actual trade. Geez, I mean, what are you supposed to do? The answer is believe in yourself. Every trader is different. Not only is every trader at different stages of trading development, but also every trader is different in the type of trading plan that they have, and they should be developing. So some traders need action to keep them focused. Some need a calm type of trading plan. There are trading plans for everybody. Now, the action-oriented plan won't work for traders needing the calm, and vice versa. So you got to find the right plan. A trader needs to do some self-inspection first. And that's why I begin all my books with that kind of approach. Define what type of trading plan you're looking for and move forward in developing one. It's not rocket science. The key is to start with a simple trading plan, one that's composed of a few proven winning elements, and also, of course, respects all the time the risk management part. Experience a degree of consistent profitability, likely some percentages at first, and make changes, and then increase your winning percentage. Look, all these gurus, look at them as your assistants, helping you get what you want. Take what you need from them and then move on, because it's all about you, okay? Okay, belief 2. You got to fail before you succeed. Well, somehow we've learned to respect trading experts who tell us they've blown through numerous accounts until they finally learned some version of the truth. Now, I guess it's because most traders are in the middle of blowing out an account of their own and have already blown one or two, and they feel they're bonding with the author. That's why they talk about that. Well, they may think, hey, that's me. I blow out a bunch of accounts. Or it's okay that I've blown out my account. I can still win with this new truth that they're going to tell me. Well, I guess it doesn't wake you up a little when you learn at your statement, when you're looking at your statement and you learn that you've got $1,000 left in your $10,000 account. You brush it off and say, next time I'll make money, I'll do this, and you refund your account. The truth is that with modern technology, you have the ability to collapse time, meaning that what took 2 weeks and months to accomplish, like drawing lines on a piece of paper like we used to do, now it takes minutes. Okay, so when the data crunching is available with just about any trade platform, you can see whether your trading ideas have merit very quickly. Failure is not necessary to succeed. In fact, the cause of most trading failure is that you don't have a trading plan at all. You're winging it. And it's traders that pay little or no attention to the mental and emotional components of trading, the discipline to follow the said trading plan without fail, that causes accounts to implode. If a new trader starts his or her journey respecting the need for a simple trading plan and the equal need to prepare for the mental and emotional component of the trading, then he or she can succeed from the start without all the pain and excuses. The same is true for the now struggling trader. Simplify your plan, train your mind to adhere to your plan, and trade with confidence. That's all you need to do. I know it sounds simple, and it is simple, but it's hard for a lot of people to face their own situation, okay? But that's not you, is it? Okay, belief 3. You have to know everything. Well, this particular untruth supplies probably the most excuses to the failing trader. It's very convenient to hide behind a lack of complete knowledge for your failures. I'm not saying that some lack of education may be to blame, but it's usually not the total reason. You'll never know everything. You'll never know everything about anything. Why would trading be different? There are literally hundreds of ways macro and micro, to approach the market. Fibonacci, Gann, Elliott, Bollinger Bands, RSI, on and on and on. And I submit that one approach is no better than any other approach, and no worse. I further submit that your best approach is to choose the form of analysis that makes sense to you and go deep in that direction. Dig in on a specific technique. That's really all you need. Leave it to the PhDs to try to learn everything about everything. It's not going to happen. Having too many elements in a trading plan that you need green lights in order to take the trade usually result in having very few trades meet all your requirements. Plus, I've not seen these trades fare any better than trades derived by one or two green light plans, okay? As long as you've developed a plan that has a strong risk management element, and I'll say that again, as long as you've developed a plan that has a strong risk management element and has good reward to risk expectations, you can misfire on a higher clip, take a lot more trades, and come out nicely on top. One last note in knowing everything. We all know the term paralysis by analysis. We've heard that a lot from other speakers and so on. Overanalyzing, which is a subset of you have to know everything, causes more trades to be missed than any other excuse. Analyze yourself, create a plan that fits, and trade with confidence. If you're going to be a successful trader, you're going to have to be a risk taker. There's no avoiding that. So yes, educate yourself, but you don't have to know everything. Be specific to one approach and then go with it. I'm just going to take a shot here before we're about halfway through, and I just want to make sure that you're with me. If you can just throw something in the chat, just let me know that you understand, that you don't feel offended, and that everything is going the right way for you. Just give me some kind of an indication, and I will then continue. Just anybody write in the chat just to know I'm not. Okay, great. Thank you. All right. Belief number 4 is that you need to be good at everything. Okay, that's kind of a derivative of the belief number 3. You know, we are in now a world of specializations. Doctors who specialize make more money than general practitioners. In fact, concierge doctors, I was paying one $297 a month just to be on call for me whenever I need it. They specialize in areas like age management, and they're the biggest money makers. It's the same for traders. Do universal laws that apply to trading make total sense to you? Then give Fibonacci your go-ahead. That should be your thing. If you're into universal laws, Fibonacci is a universal law. Do you think like an accountant and always want all the numbers to add up before you move? Well, W.D. Gann has something for you, all right? Do what you believe that the market, you got to analyze the market. You got to analyze yourself. Let me ask you this. Do you believe that the market has an ebb and flow? And markets can sometimes get overbought or oversold. Well, Bollinger Bands is for you. One way of looking at things is no better or worse than another. So what does have to exist is your honest, internal, gravitational pull toward an approach to the market. You see, when you truly believe in something, it's much easier to stay on track with that methodology, stay on your plan. If your plan is based on something you believe in, you'll stay on it. Remember, staying on track, meaning following your plan without hesitation, is the golden rule of trading. If you trust in your trading plan, you're just going to follow it more naturally, and you'll be more successful. It just follows. Okay? All right. Let's get into belief number 5. I hope I'm not going too fast for you, but these are kind of common sense things that I think that you can go with me. Again, they're introspective types of things. Here's another thing that you hear a lot, that you can succeed on your own. And this is kind of a tricky one. On one hand, trading is an independent endeavor. It's you, your computer, and your charts, and really the rest is noise. Now, before you sit down to trade, you had to have educated yourself, and that involved taking in information from the outside world. Maybe you latched onto an experienced trader or teacher who taught you all the ropes. You could have tried to learn on your own, but having someone guide you made sense to you. Okay, once you created a trading plan that you could get behind, like we talked about before, something that makes sense to you, then you're ready to go. And what about the other most important element of successful trading, the element that's 90% of what traders ignore? We were talking about it before, and that's keeping your head straight. With all of the talking heads, CNBC, CNN, Fox, BBC, etc., it's easy to get sidetracked. It's easy to get pulled away from your trading plan with thoughts of doubt and hesitation and fear, and even worse, confirmation of your trading thoughts. Okay, the thoughts of hesitation can result in missing trades your trading plan instructs you to take, and thoughts of confirmation resulting in taking a larger position than your trading plan instructs. Either way, these are influences you don't need. It's okay to keep up with the news, financial data, crop reports, whatever you trade. It's important to know the news behind what you're trading. You just can't be pulled from your trading plan because of them. Okay, you got a plan. You learn before you trade. You're taking all the news before you trade, and then when you're trading, it's all about the plan. So how do you keep your head on straight in the face of the consistent barrage of news and all the expert opinion? And the answer is you need to adapt a mental training process that will support habits that serve you as a trader while eliminating the habits that hurt your performance. Now, for some, a short meditation, and perhaps before or after you trade, can keep you composed. I do it before. I have a 7-minute meditation. There's several of them that I can choose from, but I always do one before I start trading. For others, a more physical discipline may work for you, like yoga, for instance. I'm a type A sort of guy, if you haven't realized that yet. So I found that a specific subconscious training that my wife developed for me works like a charm, and it only takes 7 minutes to do. So whatever process you adopt, remember that finding a process that works for you is likely to be the missing link to your own success, okay? You have only 2 things to master to be a successful long-term trader: having a solid, simple trading plan and having the internal strength to follow that plan. For the mental and emotional support, you'll need somebody to support you. It's a continuous battle to keep negativity out and positivity in. It's the battle that most traders lose, unfortunately, but you won't. You're going to find some sort of way to focus yourself, whether it's yoga, whether it's a short meditation that we offer, whatever it is, whether it's one of our 1-minute motivators, whether it's a 4-minute drill, whatever you use, something short and sweet to get you focused to start your trading day. Okay, that's the best way to go about it. So you can succeed on your own, but you need the tools from others in other areas to help you to do that. Okay. Of course, you could always get a coach, on and on, but many traders, especially in the beginning, don't want to spend the money or just can't afford it, and that's fine. There are micro accounts. There are micro contracts now that you can take in the futures market. They're you can go out of the money in an option. There's so many ways to have a small account and still be successful. Okay. Belief number 6, the markets are in control, not you. I hear this all the time. In one sense, the belief is true. The markets will do what the markets will do, and we're just taking shots at it to try to make money. Well, we shouldn't be fighting the market flow or movement. We should be recognizing what that flow and movement is and taking advantage of it. The other sense is where this belief is not true, is the let us use it as an excuse for why we lose trades sense. Listen, the 40 years that I've been working with traders, I've heard it all. They just ran my stop and went without me. The big money is just killing us little guys. It's just to mention a couple. Those, I think I just heard both of those this week again. I guess some rogue floor trader was looking for your ticket and exclaimed, "Here's Bob's ticket," if your name is Bob. Let's take the market down, hit him, and then go back up. And maybe some big funds are buying up a particular stock and causing the market to move. But isn't that accounted for in the chart? I mean, we all know that everything in the chart is a culmination of beliefs in what's happening around us. The problem with all of this complaining is that it takes us away from where our focus should be, which is on ourselves and what we can do to improve our trading results. We shouldn't be concerned with who or what may or may not be controlling the markets. We should be concerned solely, only, with controlling and improving ourselves. A friend of mine, Ray Barros, who manages a 10-figure billions funds in the Far East, Singapore, has often stressed to me the importance of keeping your head straight when you trade. For Ray, his process of choice for keeping his head straight, for staying disciplined, is journaling. This guy journals 1 hour a day. I'm going to say it again. Ray Barros. And you can look him up, B-A-R-R-O-S. Fabulous guy. He's always there to help anybody, and he manages 10-figure funds. He journals journals a full hour every day, every trading day. And I said to him, I was interviewing him one time, and I said, he's a contributor to one of our courses. And I said to Ray, an hour a day? Come on. Nobody journals an hour a day. Yes, I journal an hour a day because this is what keeps my head straight. I couldn't believe it. I journal 10 minutes a day, and you know, I teach people how to. We have a sheet that's available that has 97 different ways of journaling. I asked all the people that we work with, all our customers, and tell me how you journal. Well, there's so many different ones. I put out a PDF on that. There's so many different ways. He has a way of journaling. He spends an hour a day with all of the talking heads, you know, that are coming at us. We need to stay focused. And journaling is Ray's way of self-inspection and self-improvement. Journaling is a place where we can be honest with what went right and what we may need to adjust, whether it's the area of adjustment involves technical or mental aspect. Ray doesn't make excuses. The guy manages he manages billions, and he doesn't make excuses, okay? And neither should you. It's because of Ray and his personal and trading success that I've expanded my journaling time from 5 minutes to about 20. Actually, to be truthful, it's more like 15. Okay, that's not Ray's hour a day, but 15 minutes works for me, and I'm getting true benefit, and you could too. How long do you journal? Let me ask you that. Do you even journal? And don't, if you said no or very little, you're in the majority. You got to start journaling, even if it's just writing thoughts down on a piece of paper of how you can improve. Okay. Let's get into number 7. You got to start journaling. I can't stress it enough. All right. The 7th and last belief is a good trading plan is all you need to succeed. We've touched on it in a bunch of different ways, but most of us with any degree of trading experience knows that this isn't true. All of the discussion that we've had gives equal emphasis, and rightfully so, to the need for trading discipline. What good is a great trading plan if you can't stick to it? However, there is one other important attribute that all traders must have to succeed. I call it positive expectancy. There's an expression among those who study the brain and how it works, and I've done a lot of that. My wife Tisha has really helped me with that. We move in the direction of our most predominant thoughts. You know, I'm not saying you can just throw out a thing and it comes back to you, a thought. Yes, that is true to some degree. There are some yogis and people much smarter and more focused than I have that can do unbelievable things with their thoughts. With all the negativity out there, especially for traders, to a point where outsiders consider us nothing short of gamblers, you need a process to keep yourself positive so that you move in the right direction, okay? We move in the direction of our most predominant thought. I expect to make money every trading day. When I don't, I assess why through my journaling. I make any adjustments or sometimes simply realize that I followed my trading plan perfectly and the trades just didn't work out, and that's okay. I know that over the long run, I'll do just fine. I move on with confidence, with positive expectancy. That positive expectancy drives me forward, keeps me safe from outside negative forces. It's not that I'm sugarcoating everything. I'm not lying to myself. I'm being honest with what is. What it is me, my simple trading plan, and my discipline to follow that plan. That's all I have. That's all that's important. I feel good about it, and I feel good about the future every day I trade. Do you? Can I ask you that? Do you have the same kind of positive expectancy, or do 5 or 6 losses in a row blow up your confidence and you decide, oh, sometimes it only takes 2 for some people, sometimes 1 loss. I had somebody the other day that I was showing a trading plan to that's wildly successful, and when I came across one of the trades that didn't lose, oh, that trade lost. Well, sure, every trading plan you're going to have losers. As long as there's more winners than losers, and the winners are, you do the math. It's all about winning and losing. We're in a business. Losing is the cost of doing business, like advertising is in a different kind of business. And when you take a profit in your P&L, that's profit in. So we're running a business, really. Successful trading takes guts, and it takes know-how. If you're not already succeeding, know that you can. If you focus on what you can control and be confident in your ability to succeed, that's really all it's going to take. Okay? And I think, you know, I hope that you've written down these simple beliefs that are probably, I know probably 1 or 2 are holding you back, and that you have a kinship with. It's time to start journaling, start paying attention to your mental and emotional well-being, and equally important, and really what triggers all of this is that positive expectancy, that expectation to win. Again, I'm not sugarcoating. I'm not saying that that when a loss happens, I'm fluffing it off and I say, oh, you know, they just took my money. That's okay. No, I'm saying I took a loss. That's fine. It's part of the overall winning, because trading is it's a marathon, not a sprint. Okay, I want to show you a couple of things. I know I've got about 10 minutes left. I want to show you a few things that I think you may be interested in. Here we go. This is what I call mastery minutes for traders. But before I show you that, let me go back to this and just show you real fast this. I want to show you this. I want you to write this down, because this is what I'm about to show you. thedisciplinetrader.com/mastery minutes. I'm going to show you a way to keep up that positive expectation, which is the fertile ground that you're going to use in order to surround yourself with positivity, so that you can stay on your trading plan through anything that happens. Shut out the talking heads and so on, so that you can focus on what you're good at. And what you're good at is being a trader that has a good trading plan that's been back tested and forward tested, and you know can work, and now you're going to stick to it. thedisciplinetrader.com/mastery minutes. And I'm going to show you what the mastery minutes are. And I'm going to offer it to you for what I call semi-free, because I think you're going to see why it's semi-free. But I really want you to have it. Okay, I really want you to have this. What you're looking at here, let me collapse this because I don't see any questions. I'll get to it in a second. This is what happens in the Mastery Minutes. These are 1-minute audios. That's all they are, that you'll be able to download and put on your phone. You can play them right here. I'm going to play one of them right here. Okay, so that you can get an idea. It's only 60 seconds long. Now, I have to warn you that because I'm doing it through a speaker on my desk here, the quality is not going to be what you're going to get in these 60-second, really motivational vitamins. It's really a you see some titles here. There's 25 of them. I'm showing you the first 9 here, but there's 25 of them. Pick one. Okay, I'm just looking at the chat here. All right, let's go to Trade with Confidence. Okay, I'm going to play this for you, and again, you'll be able to download it. But I'm going to play you the audio. Here we go. Trade with confidence. Today, as in every day, you want to trade with confidence. You deserve to have success, and market opportunities will supply your path to that success. You've done your homework. You've mapped out a careful plan of attack, and you'll be following your trading plan to a T. You're smart enough to know that every trade will not be a winner, and you're smart enough to know that following your tested trading plan is what trading is all about. Now, it's just a matter of your confidence to execute, your belief that you're deserving of success. It's been proven that we all move in the direction of our most predominant thoughts. So it's up to you to see yourself as a successful trader now and in the future, and drive that thought with total confidence in yourself that you're a deserving and successful trader. And the truth is that you do deserve success, and I expect you to affirm that as the disciplined trader. So today, stay disciplined. Okay, I can hear the virtual clapping right there, but that's the kind of energy that I did put into these 1-minute motivators. I can't tell you, there are, and I think I can show them to you right here. I'm just re-releasing this. I released it first 10 years, about 7 or 8 years ago. And somehow I've been doing so many things, I forgot all about these. Somebody mentioned it to me, one of my coaching clients, and I said, I've got to start offering these again. We were offering these for $197. You're going to get it for much, much lower. But I want to show you how effectively this was the comments page on the original. There were 359 comments, positive comments on how these 1-minute motivators, these mastery minutes, I call them, have affected their life as a trader and turned around traders from struggle to success. These 1-minute motivators. Let me just read you a couple of them. You're great, Norman. I guess I shouldn't read that about myself. Okay. I just can't thank you enough for helping me stay focused. I've always looked at your 4-minute drills, which is another thing I did. Now I'm so grateful for these daily mastery minutes. Just what I needed. You're doing a great job helping, blah, blah, blah. Let's keep, I'm just stopping. Let's stop anyway. I use your mastery minutes continually to help my discipline to keep my discipline alive every day. Thank you very much. Let's keep strong. I'll read the short ones. Here's one. So absolutely right. Anthony said this. I don't know who it is, but again, these were written years ago. This was written in 2015. There are the mistakes that everybody makes. These are the mistakes everybody makes, and they continue to make them every day, including me. Haha. Thanks for those steps that you made. And look at, another generous contribution. Looking forward to all these mastery minutes and using them to improve my trading. 359 testimonials for it. This is where I wanted you to go. Don't use this trading. Use the link that I gave you before. Let's put that in there because you won't get here with that. thedisciplinedtrader.com/mastery minutes. Okay, if you use that, it will take you right here again. Okay, so what you'll see here are some of those testimonials I put out, and this is a 90-second video, 80-second video that explains even more specifically how the mastery minutes are going to help you. And this is absolutely true. These 60-second rituals can take you from trading. You got to stay positive. You have to have that positive expectancy. Okay. And here is just some. Oh, here's Pip Lewis. I haven't heard from him in a long time. I've made your mastery minutes my browser homepage. Great reminders here, brief to the point, and I really appreciate that you've started to have that you started with having positive expectancy. Another great tool for the trader. You're the best. Okay, so again, I just pulled some of those 359. Here are all the titles that you get. Okay, having positive expectancy, strength to take your losses, position sizing keys. This is very important. Position sizing is one of the true ways to not only expand your profit, but to control your risk. Okay, take what the market gives you. Stick to the A trade. Trade without fear. I think I have a sample here. I guess I don't. Oh, here's a sample right here. Let's trade without fear. Let's listen to one more.
Trade without fear. Any fear that you may harbor in your trading stems from knowing that in some way you're not prepared to win. If you're underfunded and you can't keep your trading risk below 3% per trade, that will result in fear. The fear that you're risking too much, and if you lose, it's something that you could have prevented, and you made a bad decision and knew it was a bad decision when you made it. You must trade from strength, which is really much easier to do and much more rewarding. Have a tight trading plan and follow that plan without hesitation. Keep your risk parameters tight. Preserve your profit as it builds in a position. Keep your losses small. By doing all the right things by design, any past fear will be replaced by confidence and your trading fortunes will turn. Fear will fill any void of confidence, so make it a rule. Have a strong trading plan and trade only your plan, and fear will not be a factor. So today, stay disciplined.
Okay, there's another 60 seconds of right at you with truth, and it's available to you, 25 different titles. You're going to love it. $27. Okay, it's limited time, and when I say limited time, I mean today, more than likely, because I can't, because I can't sell it to others for higher prices. And this is just for this presentation. $27, and it's right on the bottom of the page. You can grab it yourself. But when you donate your $27 to your own well-being, and you have access to all these 25 mastery minutes, you'll have access to this, where you can trade them and strength to take your losses. Here you can here's a place where you just click and you can download. So it's all there for you. Okay. All right, let me give you that, see if I can show you that. There's the link one more time, thedisciplinedtrader.com/mastery minutes. Okay, I really want you to have this for $27. So take advantage of it. Look, you've got to start paying attention to the mental and emotional issues of trading. It's probably, if you really sit down and self-inspect, it's probably what's getting in your way. And these mastery minutes will be the beginning of motivating you to do the right thing as far as believing in yourself. Stop believing all of these false ideals that everybody's throwing at you. You don't have to know everything. You don't have to be an expert. You know, it's not, you're not, the market isn't in control of you, okay? You're in control of yourself. The market will do what it's going to do. You just need to have that positive expectancy to make sure that you'll be there when the trade happens, when your trading plan tells you, and you'll take your profit when your trading plan tells you to take the profit, okay? HTTP / with that colon in there, thedisciplinedtrader.com / mastery minutes. Okay, we've got about 3 minutes. I'll either let the next professional jump in, or if we have any questions, I would ask them now, but do not pass this up. I think you're really, really going to love it. Let's see if we've got any questions here. Any thoughts? I guess most of what I say is fairly self-explanatory. It's surely just a matter of looking in the mirror and making it happen for you. Thank you. I see that, Anna, that you put in the link there. Okay, Anna, that's about it for me. It's very seldom that I end early, but I think there's a good time for people to fill up their water containers and get ready for the next presenter. So I hope everybody's enjoyed it. Believe it. I believe in you. You need to believe in yourself. There isn't a trader that I've met that has a will to win that can't win. You've got to have the will, and then you've got to exercise that positive expectancy. Thank you again, Anna, for having me.
Hello traders, it is my joy and pleasure being with you. In this webinar, I will teach you how to trade like a hedge fund trader with Alpha Fibonacci system, as this is what I do every day. But first, let me remind you, Fibonacci Trading Institute, my incredible team, or I, are not investment advisors, not registered with any financial regulatory authority. I'm here to teach you, to empower you how to trade as a hedge fund trader, not to give you financial advice. I'm here to remind you that all software demonstrated as is without any warranties. You are trading at your own risk. You must understand risks involved in trading any instrument. It is essential that you recognize that all testimonials from my incredible student do not guarantee anyone else's performance, and past performance does not guarantee anyone else's results. No one had ever been paid for their testimonial. This is required disclaimer. Let's start. In this webinar, we will cover key steps how to trade as a hedge fund trader with Alpha Fibonacci system. We will go over multiple examples from day trading to long-term trading, future stocks, forex, in current and prior markets. You will see how Alpha Fibonacci traders trade, including this morning. And most importantly, how you can trade as a hedge fund trader with Alpha Fibonacci system. Briefly about myself. I came to this country with absolutely nothing, with newborn in my hands at the age of 20. 10 years later, I made my first million. I managed a clinic at Johns Hopkins Hospital. I worked with top doctors on the planet. I worked in research. I worked in psychiatry. Every single thing I learned in Johns Hopkins, I teach and empower you how to become top 1%, because this is all I know. 2004, I was introduced to Fibonacci. 2008 crash showed me clearly that the most powerful thing in the market is Fibonacci, which is what you also saw in the current market. We will go over multiple examples. 2011, I founded Fibonacci Trading Institute, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel. Now we are celebrating 10-year anniversary with traders in 57 plus countries who are trading the method, from beginner to hedge fund manager to JP Morgan trader. Those are the traders I coach, I mentor, how to live, how to think, how to trade as JP Morgan traders do, because I do mentor those traders. So first things are first. Thousands of emails later, thousands of traders later all over the world trading the method. So it doesn't matter if you're beginner or hedge fund manager, if you are here and you're driven to trade as Goldman trader, I look forward to working with you. In front of you, hedge fund manager from Switzerland who trading forex. In front of you, trader who put his daughter through Harvard trading the system on options. In front of you, futures traders. In front of you, traders who invited me to their weddings, husbands who bring in their wives, fathers who bring in their children. Every single one of them trading identical system I teach to JP Morgan trader. Walmart trader chases indicators, cheap systems. Goldman and JP Morgan traders do not chase indicators. These traders not looking for cheap deals. They understand that every single software, every single indicator developed after the price. Why not go directly to the source? Why not trade pure price? This is a system in front of you. And if you can trade this, you can trade Forex, stocks, options, Bitcoin. You can trade anything you choose. This is all that matters. Do not block ever the price, no matter what you trade, as you will see next. And that's crucial part that you recognize and you think as top 1% does, because only then you become top 1%. Goldman and JP Morgan traders do not chase indicators. I know because I mentor them. And that's essential to recognize. Less than 5% of traders make money. Those 5% do not chase indicators, do not chase cheap systems. They focus on what matters. And what matters is pure price. Alpha Fibonacci trading system is a complete semi-automated system with multi-market scan and proprietary Alpha Fibonacci software. No indicators of any kind are present. And this remains the core, strategic, precise, institutional trend system that removes speculation and allows traders to trade markets as strategic Alpha Fibonacci chess across all instruments. This morning was spectacular. S&P mini futures top day trading instrument on the planet. This morning, we discussed this in our class. This is what students have done this morning. Crucial and essential to recognize. This was one of the best mornings from institutional buy point. Incredible. Maximum trade time, 10 minutes. Did you understand that? Every trader, different experience. Every trader, different account. If you manage to pull 4 points on S&P this morning, working 10 minutes this morning, one lot size $200, 10 lots $2,000, 20 lots $4,000. Brett tried for 20 years. On the website, you can see his podcast. On the website, you can see his story. Pablo, complete beginner trader when he came to me. This is in front of you, power of the system this morning alone. Serge, Dow, 99 points, trading very few minutes this morning. Every single one of these traders in front of you, I spent 30 minutes with. Ken, trading Bitcoin, movie maker in Scotland, haven't trading much because was working on the film, 143 trades, all wins. This is what they trade. This morning was a dream on S&P traders. This morning was ultimate bottom, ultimate support. Did you enjoy the ride? Did you take the power of this? November 13, November 15 was even better. This is the part that intelligent trader avoided. This is the part where intelligent traders stayed out on sidelines. Ultimate other buy point November 17th, 18th, all identified by Alpha Fibonacci system days, hours, weeks in advance. If I convert this chart right now to 3 minutes, this is what played out this morning. Ultimate buy point, but not here. But if I convert this chart to 5, identical formula remains. You do not need many trades. What you need is quality and focus. And that's what Alpha Fibonacci traders do. Walking away from the screen when market in junk at resistance. And it doesn't matter what chart you trade. Top day trading instrument in US this morning showing you. No matter what you trade, this is what students accomplished this morning from beginner to hedge fund manager, from micro account to multi-million and billion-dollar account, trading the system in 57 countries. No fear, no panic, no speculation, none. Simply using the program. That's it. How much did students trade it this morning? Gerald trading Swiss francs. Mel, new student, studying 20-30 hours a week, down 15. Jason, you can listen to his podcast on the website, 6 to 8 hours per week. That's the power of the system. You decide what you want to trade. No indicators here. And you can trade any instrument you choose on any platform. And those are two key components, pure price for entry and Fibonacci for exits. That's all you will ever need. So when Carlton comes to me and trying for the previous 15 years, and after a couple of weeks in the course, starts trading for hedge fund, is anyone surprised? Should not be. And in the last few days, he sent me this text. Made another 1650 on 11 cards tonight with only one trade. So if you come to the website, first of all, request trading room invitation when this image would pop up. Second of all, listen to Carlton. Listen to what traders do all over the world. Ken is the one who trades Bitcoin. Carlton is the one who trades for hedge fund. Both tried for many years before. Pablo never pushed button on his computer, complete beginner trader. Brett tried for 20 years before. But if you would like to see more, we continue uploading emails students sending us every single day because all of the students think and trade as hedge fund traders do. This is all I teach. This is all I know. And that's the most important part because I look at you as a whole human being. I look at you not as a partial something or someone. The way you do one thing in life is the way you do everything. And that's the reason traders bring in their best friends, their wives, their children to the course. If these traders can do it, so can you. I only mentor leaders, nothing less. And when I spend time in Hamptons this summer with top institutional traders on the planet, my students do just fine. Emmanuel brought his beautiful wife Jennifer to the course. Despite having 2 newborns, Jennifer is doing extremely well, increasing her account by 70%, with her husband more than doubling his account. And that's what means the world. It is that simple. Pure price for entry and Fibonacci for exits. If these traders can do it, so can you. You will never, ever, ever need anything else. With Alpha Fibonacci system, trader can trade any instrument from 1 minute to daily to weekly to monthly to stocks to forex to options to bitcoins, as you saw what played out this morning. Identical rules remain. The only difference, risk management and trade whole time. So if we would take a look on one of the top stocks on the planet, Apple. In the last 2 years, you can see what played out on Apple before and what's playing out on Apple now with Alpha Fibonacci system. Here's Apple. 2015, I presented hedge fund convention. Apple stuck at critical Alpha Fibonacci support, but Apple comes out with the worst earnings in 13 years. Everyone in panic. What to do with Apple? As posted on LinkedIn, as posted on multiple social media services, I state the most important thing, if this support will be respected or not, and if it will be, Apple will rally. Despite worst earnings in 13 years, Apple rallied, reaching next target 2 years later. Following targets, post-earnings, reached. Reversal zone, reached. Critical support in front of you, 216. Intelligent trader looks at the bottom. You see 140 at the bottom. It's an ultimate buy point. This support is out, Apple in free fall, rallying from the bottom. This is the power of the system. Identifies top and bottom. But identical buy point on Apple at 140 is what played out on S&P this morning. So when you can trade one, you can trade them all. Price is the same. There is no difference between gold or options or stocks or Forex or Apple or Amazon or Bitcoin. It's the same. If system works, it would work on any instrument. Apple 2019, identical to S&P. Dow, Nasdaq, gold, silver, Bitcoin this morning. So if you can trade one, you can trade them all. With Alpha Fibonacci system, risk management and trade hold is the only difference. And that remains the key, and that remains the core. So when you're trading with the first crucial step of hedge fund trading, without any indicators, with precise stop targets on all instruments, you have no stress, you have no speculation whatsoever. You're enjoying your trading, you're sleeping well at night, you don't think as majority does. Take a look at this year. Ask yourself, how is it possible that during the worst economic crisis, we just had the biggest institutional rally? I just finished the session with hedge fund trader 5 minutes before this webinar. Hedge fund traders trading system long term. So if you're using your micro account and you've been buying from this support since March 23rd, you're a brilliant trader. You think as Goldman trader does. Alpha Fibonacci system identified sell-off in advance and bullish rally in advance. Let me remind you, this system in the last year. End of 2019, Alpha Fibonacci system reaches the end of the trend at reversal zone. And when price starts selling off, no one is surprised. February 2020. Many months in advance, trader knows with Alpha Fibonacci system where critical support will be. Crucial 22,000 level is key. Black Thursday, March 23rd, this level is reached on the news panic and negativity. Intelligent day trader, position trader, investor knows this is institutional buy point. You're writing your micro account with Goldman, with JP Morgan trader, bullish rally starts. On the news, world collapsing, economies crashing, lockdown everywhere. How is it possible that market keeps rallying? Because top 1% loves crises. Many months in advance, you know where reversal zone will be. You understand that billions of dollars traded on this chart. You understand the core of key support at 29,000 level. It remains respected. Institutions keep adding longs. There is no surprise. All precise. There is no institutional shorts since March 23rd. This is picture-perfect reminder of the power of the price and the power of Alpha Fibonacci system. Day trading, not your cup of tea. Use everything for long-term positions. But if you understand that Goldman and JP Morgan and Morgan Stanley and BlackRock trading this chart, you're riding your little account with them. You never, ever, ever trade against them. And you understand key buy zones, key sell zones, days, weeks, months, and years in advance. All depends what chart you trade. And that's market now. This support is critical. This support is everything. And that remains the core of the system. Proprietary strategies, no indicators here. And that's how trade looks with the system on S&P mini future. Precise entry, precise stop, precise targets. And this is what traders share in the room. As you can see, Andy, father of Dominic, 14-year-old son, joins the course, shares how Dominic trades. Ken, trading options. Scott, trading stocks. Brett, trading S&P. Every trader, different account. Every trader, different instrument. It is 100,000% up to you what you will choose to trade. Maximum 8 hours per week. Andy, hedge fund trader. His son Dominic, 14. This is what Andy sent me. Swing trading tripled my UK live account since July 1st. That's it. Choice is yours. Do you want to trade or position trade? His son prefers to day trade. Dow, 14. A couple of classes in the course. Listen to podcasts, please. And that's very, very clear what Dominic wants to be. Hedge fund trader only. So here's a system on Amazon in the last 5 years, traders. Bullish rally on Amazon in a progress. So Andy likes to trade Amazon, Apple. Dominic likes to trade futures. Father and son team. Absolutely different style of trading. Andy understands when Amazon stock meet trend, it is essential to pay attention to reversal zone. It doesn't matter how spectacular, brutal, or vicious, or nasty, or incredible earnings are. When Amazon comes out with excellent earnings, there is no surprise with Amazon collapsing $700 per share 2018. 2019, Amazon back up to reversal zone. Excellent earnings again, and Amazon selling off again and again and again for $100 per share. This is reminding you again, trading on the news does not work. Trading with Alpha Fibonacci system does. Because if trading on the news worked, we would not have stock market now. There is no good news, is there? But market staged the biggest rally in 47 years. So no matter how spectacular earnings on Amazon are, Amazon sold off 3 times post-earnings. Market staged the biggest rally in 47 years during the worst crisis now. So if you're focusing on price, with Alpha Fibonacci system, you can trade it all without stress, without pain. Scott, hedge fund trader, came to the course trading stocks, trading futures, trading it all. As you can see what he shares, what he trades. Completely different style of trading. And when he takes his account from 4 million to 6.5 million, imagine if this is your $4,000 account or this is your $40,000 account during current crisis, traders. There is no easy market. So if Dominic day trades his little account founded by his dad, and Scott does this, and Andy does something completely different, what is stopping you? They obey these key critical steps. They strategize as institutional traders do. They identify institutional trends and ranges prior to placing a trade. That's the most important part of your trading, preparation for your trade. You're spending little time in front of the screen. You are not panicking. You are not speculating. You are not shortening your lifespan with stress. You are confident, powerful, institutional trader. You understand and think as Goldman Trader does, riding this. This morning was dream day trading. Right now, there is nothing. There is zero reason to stare at the chart. Price is stuck, and price been stuck here for the last hour. Every time price comes to this level, you walk away from the screen, and if price will not retrace to this level, nothing good is possible. Nothing. But you're not entering anywhere near here. This is broker's heaven. Broker printing money if you do not understand what price is telling you. With the help of software, this is what price is telling you. It's pain. Smarter thing, walk away. You become successful with sniper's mentality. You understand. Ultimate bullish trend inception with institutional bullish bias is the ultimate place to enter. And that's crucial key point, traders. Everything else does not matter. This is key. You must think and trade as institutional traders do. Everything else creates only stress. This is ultimate stress-free way to trade. And that's thousands and thousands of posts later, thousands and thousands of emails later. This is the only way I mentor my traders on futures, on stocks, on forex, on options. Choice is yours. What you want to trade. Using this, pure price for entry and Fibonacci for exits, rule-based alpha Fibonacci chess. This is Dow futures. So when Gerald comes to me, CME trader with 35 years experience, after 1 week with Fibonacci Trading Institute, this is what he shares. You make trading a joy. This morning, I worked with Gerald's brother, Derek, hedge fund manager in Palm Beach. It's my joy. We are expanding our community with families of traders. But exact same system I was teaching to 14-year-old Dominic, I'm teaching to hedge fund trader, I'm teaching to JP Morgan trader. Using this, ultimate bottom is a place to buy. This is oil 2016. So if you bought oil at ultimate bottom in 2016, you've done a brilliant move. And you know many years ahead, where reversal zone will be 77. 2018 oil in free fall. You understand that 55 is last stopping support on oil. And when this support is out, you understand that oil heading very, very low. Student in Saudi Arabia buying oil, buying the bottom at historical low. It is shocking the numbers we see on oil negative. Ultimate bottom 2020, but very different numbers than in 2016. And here is oil now, frozen, stuck at resistance. Nothing here to do. Ultimate bullish trend inception is a place to buy from, not into resistance. And that's identical thing you saw on S&P this morning. And if I convert this chart to 1, what do you see? Exactly the same. Ultimate place to buy from? Now, pure junk. So if you operate as a sniper and you trade with institutions, you are not wasting your time on junk. Massive, massive junk for the last 2 hours. Intelligent trader practicing golf swing, going for a run, practicing yoga, anything else. Not wasting time paying for broker's vacation, paying for your own. Final crucial step to identify your trading range prior to trading. Every day it will be different. Every day trading will change. You must understand that. And when you do, you're spending very little time in front of the screen. But even during the most difficult markets, our students do extremely well. A lot of them like to trade gold future. Stunning, flawless shorts with precise entry, stop, and target. No speculation here. It is ultimate alpha Fibonacci chess. And that's what traders do, even the most difficult market conditions. As Jennifer joking, 13 points S&P, 25 points gold. Kiddies need shoes. Her husband Emmanuel brought her to the course. And if you're trading pound, of course you can. Nothing is a problem with Alpha Fibonacci system. Identical formula applies. Do you remember this critical support on Apple? Do you remember how critical this support was on Amazon? And how critical this resistance was on oil and is present on oil right now? The support is out, pound crashes to 111. Hedge fund manager I work with in Switzerland invests in Forex long term. So how is it possible? Has anyone heard good news in Britain? That pound staged the biggest rally in many, many years? Brexit and COVID. England in full lockdown. We are rallying again and again and again because it is the bottom. But you knew this years in advance. Choice is yours. What do you want to trade? With Alpha Fibonacci system, you also have opportunity to trade with scanner. Scanner comes with multiple time frames. You can insert multiple instruments on the scanner, and when synchronicity is present, it means institutional volume, institutional power, the least stressful trading. Institutional bias bullish, trade giving you bullish alerts, rules are met, take a trade. Rules are not met, walk away. You operate as a chess player. And that's what scanner looks like on any instrument. So this is crucial key step. You must ask yourself, are you operating as top 1%? Or are you operating as 95%? 95% chasing cheap indicators, cheap systems, cheap answers, when in fact answer lies in you and in quality system. So if you think and trade as institutional traders do, if you ride Goldman, JP Morgan, BlackRock Power, and you think as top 1% does, You are in very different category. You are not majority of those who never make it in trading. You don't think as speculator. You don't think as gambler. You're trading markets as strategic chess. And that's what traders do all over the world. As you can see, Emmanuel, Jennifer's husband, says, Alla teaching is ridiculous. If we just listen to what she teaches, we will be millionaires in less than a year. And that's all that matters, traders. So if you decide to join us, it's one of the smartest things you have ever done. Powerful system proven all over the world for the last 10 years. Join us in the trading room and review careful information on website. Everything explained very, very carefully. Method traded since 2011 in 50 plus countries on all instruments. And if you want to listen to traders' podcasts, please do. Thousands and thousands of emails and traders all over the world trading this system. So if you decide to join us in 3 months course with lifetime system or lifetime software for Ninja 8, you will have live classes, videos, modules. And if I work with you in private mentoring, I hold your hand and I teach you multi-million-dollar trade. I teach to Wall Street trader. I work on your weaknesses. I polish your strengths. All group classes, modules, videos, everything included. And that's our community of traders all over the world. But if you would like to see thousands of videos on YouTube channel, it's all available to you. Any questions for me? Simply click on Contact Us page and call or email me. 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. Any other questions for me? Please do ask. My joy and pleasure, of course. You're welcome. I hope you're joining us because you will love our community, you will love our traders, you will love, love, love the system. You will never, ever, ever need anything else. So spelled out on the website, you can trade on any platform you choose. Any platform. Software for Ninja 8 came out in 2019. So if you're on Thinkorswim, MT4, MT5, TradeStation, TradeView, CR Charts, any platform, of course you can trade. Software for Ninja came out in 2019. So choose from the option appropriate for you. You decide what platform you want to trade. Ninja 8 option with software with multi-market scanner. But if on any platform there is Fibonacci retracement tool, there is pure price, you can trade it as a method traded globally on all platforms. Again, scanner for Ninja 8. It shows clearly Ninja 8 software. System for all other platforms. Software Ninja 8. So please read and review in detail. As I explained in webinar, multi-market scanner for Ninja 8. So if you're serious about day trading, you understand the difference between Thinkorswim, which is options platform. It's not day trading platform. Ninja is day trading platform. And that makes a world of difference. So yes, many of these traders using Thinkorswim. You're looking at them. Options, It is not day trading platform. Options. So if you're clicking on podcast, all the option traders, majority of them on Think or Swim. Listen to podcasts and decide. Any other questions? So thank you, traders. If there are no other questions, I must show you this is a post prior to the webinar from my incredible students. That's it. So from my incredible students and from me personally to you, I'm wishing you a very happy Thanksgiving, a very healthy Thanksgiving. And I would like to ask yourself a question. Do you think as top 1% does? If you're ready to think and trade and live as top 1% does, I look forward working with you. This is all I know, and this is whom I mentor. So thank you, traders, so much. My joy and pleasure working with you. Thank you.